Namaste and a very warm welcome to our valued guests, prominent speakers, industry leaders, and fellow professionals. I am Saket.
And I am Khushi.
We are extremely thrilled to have you all at Omnifin Leadership Conclave 6.0 with Leverest.
Before we go on any further, we would like to take a moment to thank our partners, Leverest Financial Services, for their continued support and contribution. Thank you, Leverest.
We would like to express our heartfelt gratitude to everyone present here today, which I have to admit is making me a bit nervous. I have never been nervous while valuing Fortune 500 companies, but this audience.
You're absolutely right, Saket. It is only at Omnifin where we get to debut at such an august gathering. I mean, look around, we have CEOs, CFOs, Big Four partners, and business leaders who have built and scaled businesses.
Exactly, and that's what makes today special. We are here for honest conversation from leaders who have been in the trenches, which, by the way, will be felicitating in about a few minutes. So if anyone needs to silence their phones, now would be the time.
We started with this leadership conclave in the year 2018, and today Omnifin takes yet another step in this remarkable journey. It is a little overwhelming, but we are very proud to do it every year, bringing towards its 6th edition. The theme for today is Blueprint 2030, Innovate, Lead and Scale, which reminds me of the great words of our visionary Gandhi ji. The future depends on what we do in the present, not what we plan, not what we hope for, but what we actually execute today. And that's what the leaders in this room are doing. Not waiting for 2030, but actively building it.
As we embark on today's event, I encourage you to engage, exchange ideas, and participate to make discussions more interactive and interesting. With that, let's commence today's discussions. To begin, it's our honor to welcome on stage founder of Omnifin, Mr. Vikash Goyal, whom we dearly call VG.
I'm sorry to interrupt, Saket, but it's officially Dr. Vikash Goyal now. With immense pleasure and pride, we'd like to inform everyone that Dr. Vikash Goyal has now completed his PhD this month after 5.5 years of rigorous research on developing an analytical framework on valuation of private companies. A huge round of congratulations to him.
Absolutely. And that's just one milestone in an extraordinary career. Dr. Vikash Goyal is a two-time 40 under 40 and winner by ICAI and Business World. He is a fellow chartered accountant, a registered valuer, a research analyst with SEBI, and holds advanced management credentials from IIM Calcutta. With over 19 years of experience in business valuation, financial consulting, and talent management, his visionary leadership has been instrumental in shaping our organization. He is also an accomplished author of 5 best-selling books on valuation. Let's call VG for his opening remarks.
The PPT. It's not here. Okay. Can I speak on this? Yes. All right. Thank you, Saket and Khushi. There's a standout here, so I look even taller. Thank you so much. Thank you everyone for coming and joining us here at the 6th edition of our Leadership Conclave. Like they mentioned, I mean, we started in 2018. My father is here, my Tauji, my uncle is here. And as a first generation entrepreneur, I always felt that, I mean, I don't know how to run a business. There's no lineage around running a business as such. So I've taken one step at a time and really feel blessed to have the kind of support that we've received over the last we are celebrating 10 years of my entrepreneurship this year. So feeling really, really blessed around how the journey has been. It's been a roller coaster, but at the same time, can't ignore the blessings. So the only way I think we could express our gratitude to all the people who've supported us along the way is to sort of organize a program like this. We can only share insights. And at the same time, I have my own selfish act here that I don't want to miss out on the wisdom of the people on an everyday basis. So why not meet together, join together, and then just share some insights. So that's the whole purpose of organizing this. This year our theme is Innovation, Blueprint 2030, Innovate, Lead and Scale. So I was thinking about what should we do. I mean, we see innovation all around us. The markets have been extremely volatile. We've seen what Anthropic has done to the whole ecosystem in the last few weeks, probably just. I mean, of course, it's been all around for quite some time now. So it's all about innovation at the end of the day. So what should we talk about? So I thought let's talk about innovation, lead, and scale. So of course, we work with hundreds of businesses every year. Right, we work with startups. We work with over 1,000 startups in our last 10 years of journey, and of course, unfortunately, most of them don't see the second round of funding, right? Because what's the average life of the business? And do you have a sense? What's the average life of a business in India or even globally for that matter? 4 to 5 years is for a startup, but then overall for the businesses that we see around us, the average life globally, and I'm not talking about the recent statistic, I'm talking about a long-term statistic, is not more than 30-35 years. Yeah, 30-35 years at the max, right? And it doesn't go beyond the average lifespan of an individual's career, right? I mean, we start working at around 25 years of age and we retire around 60-65 years of age, and that's the typical period that we see even for organizations. Even for businesses which are family-run businesses, which see the second generation of businesses, etc., most businesses don't survive the third generation. So maximum 40-45 years, and you don't see beyond that. But then we've seen companies who've been running for a longer period than this, right? Companies which are beyond the average lifespan. What do these companies do, right? So I'm very fond of this curve. I'm sure many of you are familiar with this curve. We call it the long-term curve, right? And if you see on the vertical axis, you can see value, you can see growth, you can see revenue, right? And on the horizontal axis, we have the time. Now, if you look about the life cycle of the company, that time could be in weeks, months, years, decades, or centuries, right? Now, how do you stretch this life cycle of an organization? What do companies do when they are able to go beyond that 35-40 years of life? So they have to look at innovation at every point in time. So if you look at this curve, right, what does it do? It increases at an increasing pace, then increases at a decreasing pace, then stabilizes and then declines, right? But look at the point where I'm marking innovation. That's the point where the company is increasing at an increasing rate. And that's where most intelligent businesses focus on. Because if your business has started increasing at an increasing pace, now is the time to really focus that, hey, I am going to go into that next cycle, that next phase, and I need to start innovating at this point. And that's very counterintuitive for most businesses, because they are in that trap that, hey, my business is growing at an amazing pace at this point. So therefore they forget the innovation, they forget what they have to, because see, the only thing that's constant is a change in time, right? Every time changes. So what do you do when you look at innovation? So innovation can come in different forms, right? You can do a product development, you can do new business models, you can do new geography, you can enter into new geographies, you can do digital transformation, and that's what most businesses are doing these days. And you can also do inorganic growth, right? You can get into acquisitions, you can do joint ventures. So that's where the pivot has to come in. So therefore, when the organization is at that point, now is the time to look at new businesses, geography, transformation, new models, etc. Now, innovation, if I have to talk about this for a couple of minutes, innovation is not the same as experimentation, right? Most organizations spend a lot of money. How much money do you think companies spend on R&D, on research and development? 2 to 3% max, right? Even for tech companies, I mean, how much money do tech companies spend in terms of R&D? Less than 5%. So, less than 5%. But the ones who are really big, the ones who are really doing well, spend upwards of 7% on R&D, and just 7%, mind you, right? And these companies have a margin of 25% approximately. So, but then, of course, you have to experiment because you don't know where the innovation is going to lead to. So therefore, innovation is not the same as experiment. Innovation should be focused towards getting better margins and towards developing a competitive moat. That's very, very important. So any experiment, any innovation should be aimed at in terms of getting better margins and developing a competitive moat. Competitive moat, because again, why do you do acquisitions? You may do acquisitions because you have to develop a competitive moat, right? Why do you develop technology or digital transformation? So that you can reduce your cost, improve your margins. So please remember, I'm reminding you that when I'm talking about innovation, I'm not only talking about a digital innovation, I'm not only talking about R&D, I'm talking about new product development, new geography, new markets, right? And digital transformation at the same time. So, I mean, we look at companies as an example. So look at Zoho, right? Has done an amazing job. I'm sure everyone recognizes Zoho here, right? There was a time when we used to do so much of training for SAPs, and an ERP system is something that was completely unheard of for a mid-sized organization. Zoho has broken that barrier, and now we have reached a situation where the government of India is promoting Zoho, saying that, hey, we are deploying Zoho in our departments, right? So an amazing job in terms of how you can innovate, right? So have their own data centers, have their own AI tech, have their integrated product stack, right? And their own programming language. And just imagine, I mean, the company works in a manner where you need only a CRM system, you can take just a CRM part. You need only a project management system, you can take the project management part, and so on. So an amazing example from India. And for some reason, I always want to take India company examples, companies that we can sort of relate with, right? So classic example in terms of Zoho. On the other hand, from our very own land of Bengal, what did we see with Hindustan Motors, right? The king of Indian roads till 2014 and completely vanished. Why? Because it didn't innovate enough. It thought that being classic is our moat. Being classic was not their moat, right? So the relevance got decayed. They thought that I am plateauing, but then that's a good thing. It was not a good thing for them at all. It was not stability for them. They had to go to the next level, which is decline, because they never innovated. And of course, didn't spend enough on R&D. So moving to the next step, right, from innovation to scale, how does scale work? So when you look at scaling, on one hand, we are talking about revenue growth. On the other hand, we are talking about scalable revenue growth, right? And how do you scale with respect to revenue? So again, remember that investors do not reward just ambition, they reward structure. I mean, I'm sure many of you are actively participating in the markets. The companies will always do better if they are predictable in terms of their R&D, in terms of their revenue growth, and not the ones which are not predictable. So I always take the example of Indigo. I've researched about it a lot. I'm sure some of you will think that, hey Vikash, we all saw what happened with Indigo in December, but think about it, right? Even after those incidents, now we have got global portfolio managers who are now investing into Indigo. A classic example. I can go on and on about Indigo in terms of what they've done with their cost structure, with their innovation, and with their scaling, right? They are operating international flights now, they have business class now, right? Small examples of how they have been able to manage their costs in order to scale. And I mean, yeah, I want to actually, I'm very biased with Indigo as a business model, not as a flight carrier, but as a business model. On the other hand, we had FarmEasy. The company raised a lot of funds, right? Grew a lot, but then they were not disciplined in terms of their growth, and therefore led to 90% markdowns in valuation. So anything that you do, you have to do with responsibility, right? So what happens when you look at, if I go back to this, sure, sir. Sir, I'll get back. Okay, aa gaya. Haan. So you see, what happens when you are investing at the time of high growth? You start a new business model, you start a new geography, you start a new product, and that helps you go beyond that first curve, and it helps you rise above the first curve and scale. Moving on to lead, and I want to ensure that I'm not spending too much of time here. I'm already nervous. But when you talk about leadership, you have to move from personalized leadership to institutional leadership, right? How many of you think that Zomato, when it got listed, got its premium valuation because of Dipinder Goyal? Right? I don't know why this myth got circulated that Zomato's valuation is coming from Dipinder Goyal's presence. No investor, no market gives a premium to an organization for their promoter, right? If Omnifin is only running because of Vikash Goyal, it's not a good thing for Omnifin at all, right? Because we are talking about moving a company's life from 30, 35 years to 100 years. Vikash Goyal is not going to be present for 100 years. So no market gives a premium to a business owner. Yes, that business owner's presence might help in the short run, but in the long run, you have to institutionalize your leadership. You have to have a very strong board. You have to have a very strong management system. You have to have systems and processes. If Dipinder Goyal wants to take a break for a week or for a month, the company's stock performance goes down. How is that a good thing for anybody, right? So therefore, you have to look at management depth, you have to look at succession planning. We're going to talk a little bit about these in our panels today. We have to look at board oversight. We have to look at reduced risk profile. And that's very, very important when you want to lead. There are innumerable factors that leads to leadership. I want to focus on a couple of them. One of the very interesting things that we've seen in the recent past is the board oversight piece, right? We are seeing a flurry of companies going for IPOs, both SME as well as main board IPOs. But for those of you who've been involved with the managements which are going for IPOs, we recently started IPO preparedness work a couple of years back. And every time a promoter says that they have to set up a board, the first requirement is, there's a legal requirement to have an independent director, but there is always the common ask, भैया वो independent director लेकर के आओ जो ज़्यादा सवाल ना पूछे, right? वो independent director लेकर के आओ जो objection नहीं create करे, मेरे business पे कोई एक दिन का pause नहीं आना चाहिए, right? But then again, think about it, that's never going to help you. That is never going to help a business in the long run. Investors love independent directors who are high on governance, right? So when you look at, and the point is that you have to move from from personal to institutional leadership. Classic example, Zerodha. Again, another form of leadership comes from cultural value creation, right? Think of companies like Zerodha. In fact, I had a very interesting encounter with Mr. Anand Deshpande. You know who's Anand Deshpande? Persistent Systems, right? I met him yesterday, and I was so thrilled with the kind of way he's created his value for persistent systems. Over 100 employees in the company are millionaires, billionaires, right? He started issuing ESOPs very early on in 1999, right? Most of his partners have become crorpatis now, and amazing way of building talent and creating value through the cultural systems. And same with Zerodha, right? So I thought this is something that most of you can relate with. So no sales pressure, right? Bootstrapped company, no fundraise, very, very low attrition, near zero attrition in Zerodha, near zero. On the other hand, and again, you build governance through transparency, right? So again, another example is Titan. You think of Carrot Meter, you think of how the trust has been built. I mean, of course, it's a Tata brand, right? So you can expect this from a Tata company. On the other hand, you think of companies which have demonstrated fictitious revenue. I don't want to take names of these companies here, right? And therefore, this is the only slide where I've not taken a company example because we know there are many, right? Internal control failures, rubber stamp independent directors, gimmicks to increase spreadsheet valuations. We oftentimes get requests. Every week we will get at least one request. Because iska to value, yesterday the company was formed and we need a valuation of 200 crores. DCF se kar do na, right? So we have to deal with those kind of requests most often. Finally, this is the graph that I wanted to leave you with, right? That only when you follow some of these parameters, some of these factors, can you lead to a long-term growth curve. You can stretch the organization's life and lead with scale. Okay? So this is the only way you can lead with scale. So finally, is the innovation improving your economic structure? If revenue doubles, do your margins increase as well? Can the business function smoothly without the daily promoter intervention? Does the governance strengthen as we grow? And would institutional capital pay a premium for our predictability? I mean, think about every company which is able to raise a QIP round after an IPO, right? Gets a lot of respect. Why? Because the market thinks that yes, if after an IPO the company has been able to get an QIP, that means the governance structure is still intact, the growth factors are still there, and therefore the company must be doing very well. Unfortunately, we are seeing a templatization there as well, right? And now companies are using QIP as a route to say that yes, we are good, but then we'll have to see how we move past this as well. So that's my time. Thank you so much once again for joining us here. I really look forward to interacting with you, engaging with you, and of course listening to our panelists. Thank you.